Good morning, everybody. Hey, welcome to Monday. It is President's Day. The markets are closed, but Dave and I will still carry on a little conversation here in just a few moments. It is, like I said, a holiday, so the markets are closed. The commodities markets will be open, but the actual futures and everything pretty much on the close right now. So, hey, with that, we got Dave coming up here in just a few minutes to talk about. I don't know, we'll find something to talk about here in just a moment. Before we do that, though, let me just remind you, there's only one thing that any of us can control within our portfolio, and that's how much risk we have. We can't we can't control what happens in Russia. We can't control what happens in the stock market, but we can control how much risk you have in your current portfolio. That's why we developed the Core Retirement Design, our process to help you design the retirement you always dreamed of. Give us a call at 863-382-0037 and schedule your core retirement design. And we've got Dave coming up next.
Statler's here today because the markets are closed and we're both kind of scratching worried itches at the moment. It is time to check in on your finances, and from Statler Financial Services, we bring you live and direct, and I don't know from where this morning, Philip Statler. Good morning, Philip.
Hey, good morning. Hey, at the house today before I head to the office, but we'll be there shortly. And it is, it's President's Day, so the markets are closed except for the commodities market. And we'll talk about that and more in just a few minutes. But no earnings reported, no macroeconomic stuff. So just you and I today, Dave.
That's pretty much the extent of it. The week is going to be a fairly busy one starting after Wednesday. We're going to be kind of scratching and talking about Ukraine and talking about the commodities and talking about the wiles of the economic policies in Washington for the first 3 days of the week. But starting on Thursday, we're going to get something that could be a market mover. And the one report of the week that might be a positive market mover is going to be the GDP report on Thursday morning.
Yeah, it will be. We get that second revision in the GDP for the fourth quarter of last year. Now, it's expected to be the same as it was last time, 6.9%, which I think, if you remember right, I think that was like 2 points higher than expected when it came out.
Yeah, it was a big, pleasant surprise when the first indication came out. So if it holds at that without a downward revision, that might be our one probable positive market mover for the week.
Very well could be. I mean, we got new home sales will come out too on Thursday, but it'll be after you and I speak. It's about 10 o'clock on Thursday morning. That'll be Friday morning's news, as well as we get the personal income, personal spending on Friday, as well as core inflation. So,
And the core PCE inflation rate is the one the Federal Reserve says they're putting all their weight on these days. And that's probably why I'm saying the only good news is going to be the GDP report, because I'm really getting kind of cynical about the inflation rate ever beating expectations.
Yeah, well, that's true. I found this one interesting too. Now, it won't come out until after you and I speak on Friday, but there's a 5-year inflation expectation. And the final number is supposed to come out at 10 a.m. on Friday morning.
Who's producing that? That can't be the government.
I don't know who produces it, but it is on my economic calendar.
And I'm not looking forward to hearing what they're likely to say. Although if it comes out of the government, they'll say everything's going to be under control by the end of the year, right?
Exactly.
We trust our government to give us the information.
The right answers. Yeah, the right answers.
Yeah, unvarnished and completely unbiased. Setting the table for the morning Friday was really kind of another one of those crap hole of days. The Dow was down 233 points. Standard & Poor's was down 31. NASDAQ was down 1.23%, down 169 points. And I was doing some math before I made the phone call to you this morning. And with the futures pointed downward, and again, they're trading futures, even though they aren't necessarily going to open the market. With the NASDAQ trading downward this morning on the futures by 2.6%, we're going to be bumping our nose on bear territory on NASDAQ if we open up when the real money starts to get thrown around tomorrow morning at numbers like that.
Yeah, we will, Dave. I mean, the high, the 52-week high, which was an all-time high at 16,212. We closed Friday at 13,548. And Yeah.
percent off the high. Yeah.
So you're right. I mean, it could really, if it continues at this level, it may not be real pretty.
It might not be. The Dow, by the way, is only off by 7.8% off its high. We've got a little bit of room to go, and I'm not saying we're going to stay out of it, but we got a little room to go before it hits correction level again. But yeah, there's absolutely no doubt the combination of inflation concerns, and that obviously with interest rates going along with it, that's definitely upsetting the more growth-oriented stocks on NASDAQ. And then you add in the upset in the Ukraine, worried about what's going on over there and what that could do to international markets. This is just not a time for day traders to have a good day at all, is it?
No, it's really not. I'm looking at the S&P 500, and it's really close to the correction mode. Not quite, but if it opened where it says it would open today, I think that would put it at the correction level, or
I
or,
didn't
or
get
pretty close to it.
I didn't get into the S&P. I kind of did the Dow as being the most stable blue chips, and then went to the Nasdaq and wanted to see what the growth stocks were. But yuck, the correction is almost a fait accompli at this point because Nasdaq's already well into that territory, and nobody wants to see any of the major indexes get into bear territory. That sends a message that amateur and professional investors alike get nervous over.
Well, that's true, and it really makes it hard to navigate too when one index goes into the bear market and the other two don't. Because now we're talking, we have to look at several different indicators to make decisions and to run some different protocols through to make adjustments to portfolios.
Absolutely, and it does put us in such an iffy territory too that when a financial advisor like you looks at somebody's portfolio, you've got a whole different set of measurements that you're looking at in terms of minimizing their risk, because pretty much tells you that growth stocks ain't the place to be at the moment for somebody that's looking at a 5-year upward curve.
Well, that's right. I mean, what you have to remember is that there's only one thing that we can control in anybody's portfolio, and that's how much risk they have. And they're getting tested right now with this downward movement in the marketplace. And the question is, how much downward risk can they afford, and how much can they stomach? Those are really two different numbers, and we like to look at those and help people really, line their portfolio up with how much risk they can really handle overall.
Absolutely. And we need to clarify too that risk is a 4-letter word, but it's a bad 4-letter word when you're 5-10 years away from retirement. If you were talking to a 40-year-old with 20 odd years to go before he planned on retiring, there's a golden opportunity there. You may not time the bottom on NASDAQ, but at the very least, we know there's growth potential there. So risk can also meet upside potential if you got enough time to realize it.
Well, that's true. It's all about time. How much time do you have? And then that really dictates how much risk can you afford to take in terms of your retirement assets, because the closer you get to retirement, the more and more important that becomes. I still remember back to the folks in 2000 and to 2008 that had to postpone retirement because their 401ks got beat up so bad in that bear market that they had to just wait a couple of years before they could really afford to retire. And I don't want to see that happen to anybody out there.
Absolutely. My IRA, it recovered, but then again in 2008, I had quite a few years before I was planning to retire. It's funny how my outlook has changed over the years. I was a buy and hold and go through the dip when I was in my 40s and my early 50s. Now all of a sudden I'm in my late 60s, and all of a sudden risk has become, like I was saying, a 4-letter word I don't want to hear. Things do change as you age.
That's right. And you need to be ready to make changes within your portfolio to adjust to retirement, because it's a different strategy, it's a different philosophy when it comes to managing that retirement portfolio versus the growth portfolio trying to get ready for retirement. So if you're trying to put money away for retirement, you love risk because risk will ultimately reward you down the road. But the closer we get to retirement, the more distribution phase you become into, then the less risk we need in our portfolio to make sure that the ups and downs in the market don't affect your cash flow.
And if you're like me and you need to see some growth in the process, you need to be very cautious and make sure some of your IRA investments are in a position where you know they're going to grow at least a modest amount, and then play with the others if you must take some risk, making sure that you got it mixed properly so that you got some hedging in there.
That's right. It takes both. You can't be all safe. You can't be all at risk when it comes into retirement. because neither one of those scenarios will play out well for you. You need to
Yeah.
have the right balance between risk and safety.
Yeah, absolutely. As you mentioned, we're rather quiet in terms of news coming out, which gives us a chance to talk a little bit about overall general strategies. But after a negative day on Friday, the futures are trading until the markets would have opened anyway, and then they'll shut down for the day. Commodities will be going through the day. What are we looking at in terms of a trend during the off day here today, Philip?
It's not pretty, Dave. It's a lot of red ink, especially in the NASDAQ 100. I mean, it's down 1.3% right now. It'd be down $185. The S&P 500 is down about 0.75%, and the Dow is down about 0.6% right now. So, we'll wait and see if there's more damaging news coming out of Russia. I suspect that number will get worse. If there's some highlights that seem to improve that situation over there, we may see a reduction in that loss. I don't know where we are today if we'll really see green ink. It would take some massive good news to make that happen. On the commodities,
it does kind of look like there's a little bit of a turn. My delayed quotes had NASDAQ down by like 361 points, so somebody saw some optimism anyway, didn't they?
Well, yeah, I guess so. I mean, my NASDAQ, well, I guess this may not be delayed, but yeah, it is a little bit better than what you're seeing there. On the commodity side, we see silver down 0.8%, and gold down almost 0.2%. Now, gold actually closed, I think, just a tad, like a penny or two over $1,900 an ounce on Friday, but right now it would open at it's trading at $1,896 an ounce. And then crude oil is heading up, not as bad as it was on Friday morning when we spoke, but it's still up about 1/3% to $90.55 a barrel.
Well, poop. The overseas markets, you can almost tell how bad they're doing by how close they are to Ukraine. Asian markets closed fractionally down overnight hours at 6 a.m. this morning. Remember, overseas, it's not President's Day. It's just called Monday, so they're trading. Halfway through their trading day, the closer you get to Ukraine, the worse it looks. France is down by about 2.5%. Germany by a little over 2% this morning. Great Britain's on the other side of the channel, so they're only down by a little under 1% this morning, but it's definitely red ink all the way through. You mentioned, Philip, you're going to be in the office a little later on. Advice is needed as strange as things are right now. How do I find you to get an appointment?
Devin, give us a call at 863-382-0037 to walk through our core retirement design. It's our process where we help people design the retirement they always dreamed of, where we help them manage their risk and develop a portfolio that lines up with their risk management, their risk tolerance. So give us a call for that. Check out our website at statlerfinancial.com. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730, and simulcast on 95.3 FM.
All righty, and back here again tomorrow morning about the same time when we're actually going to have some real money to throw around later on. Philip, thank you so much. You have a good day, and we'll catch you then.
All right, man. You too.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Hey, folks, again, I want to thank you for joining us. I hope you all had a great weekend. As we head into this week, stay tuned. A lot of stuff coming out that could affect the economics and affect the markets. So tune in every morning, same time, same place. I look forward to seeing you again tomorrow. Bye now.